What's up, you dirty apes? Miss me? Nah, you miss your liquidated accounts from the chop, bruh. Figured I'd do a quick update on BTC. It's been a minute. I haven't done one of these videos in a while. So, I was playing around with some of the ideas I had for BTC. I figured I'd share. So, where are we? This right here, it could be one of two things, right? It could either be a consolidation with the intention to go higher again, or this could be a distributive top, right? One of two things. So what I normally start with is EMAs. It's kind of like a health check to see where the price is relative to the moving averages. So you can see on the daily, it's been respecting the 10 and 21 EMAs on the way up. Here was the first close below it. That's usually a sign that potentially the top is in. So you just have to monitor whether price action is consolidating around it or if it's going to start rejecting below the 21. The more time you spend under them, the more potential this could reverse on the daily than weekly. In this case, you could see we close well below it here, taking out the external low, but then immediately reclaiming that deviation back into the 10 and 21 EMA. And you can see we're holding it right now, so that's kind of bullish. On the weekly, look how well it's been respecting it from the bottom. So once we closed above it, you could see it started flipping it into support with one deviation here that was just rebalancing the range. And then every pullback on the weekly has been closing above the 10 EMA. So that's a very good health check, I would say. And the trend is very strong overall. Here we pinned the 21 and we closed both the last two candles above the 10 and even the prior two. So this range right here is really strong. Based on that, based on the trend on the weekly, I would say that this is looking pretty bullish, right? And typically the market can do this: expand, consolidate, expand. That's one way to do it. It doesn't do this where it marks a top and then just reverses after consolidating. That's normally not the way tops work. The way they would do is kind of like this: consolidate, raid the top, and then down, creating more liquidity and taking that liquidity. So this to me doesn't look like a top yet. It does look distributive, right? But that's not how tops look normally. Normally they'll do one last raid and then down. Otherwise, if it was the top, it would have raided the previous all-time high and then just immediately marked down. So that's more of like a blow-off top schematic. But yeah, in this range, we'll try to break down the range. So if you look at this right here and zoom out, this could be basically an external high, external low, and this is a range that was immediately reclaimed after this, and you could call that a deviation. So one way to look at it is within this range, you're just range bound until it breaks. So maybe that was your deviation. Maybe you do one up here, taking out these two equal highs, right? Either way, it's just a range right now. So you would just be trading that in the interim until you start building below this low, and then you would assume that this is a breakdown targeting the next demand zone, right? So the other thing I see, if you go back to April 2nd and just mark out your IPTA data range, which is basically the opening couple days after forming your high, right? So the beginning of the month after forming your high is right here. And you could see where your 20-day, 40-day, and 60-day look back lows were. So that was your 20-day, 40-day low, 60-day low. So basically just keep that in mind. And we'll try to go more into the intraday now. So the one thing I'm seeing is on the way up, you could see this zone right here looks very TWAP-y. So if you're looking at this on a 1 minute, 5 minute time frame, this would be like a TWAP, where you're accumulating in an uptrend and they're protecting every low, engineering liquidity in the range. So basically, if you break below this low, there's a strong possibility that you get a cascade in this range. The thing is, where we are right now, we're not even close, so you wouldn't even look at that range yet. You just have to be aware if price goes there. This right here is our first consolidation zone, or Darvas box, where you have a high, a low, and then you expand out of it. Here's your second accumulation range, big displacement coming out of it, and then you have this one right here, right before the all-time high. So that was your previous all-time high. Typically in a buy or a sell model, in this case, this was the buy side of the curve, right? So the buy model will complete above a key external high, which in this case was the previous all-time high. So anybody who had stops above there, they agreed with the market that that's their invalidation. If you go a tick above it, they're willing to be stopped out and become a forced buyer of their short, which creates liquidity for anyone who's trying to fill like high volume in shorts above that high. So this is a liquidity event where basically you get order pairing. Forced buyers are selling to willing shorters above that level. So that's order pairing, and that usually happens at the top of a buy model. And then what you're looking for usually after that is your low risk sell. So if we drop it to 4-hour time frame, you can see there's one up candle right here before shifting and closing below this structural low right here. So that's your 4-hour shift, right? So any retracement back up within this stealing range, you're looking at the 50% equilibrium in the range. Anything above that, you're looking to see, does it sell off above the middle or equilibrium of the range? In this case, it does inside of that order block. And if you drop the time frame to 1 hour, you could see inside of the 4-hour order block, you also have an imbalance. So this is typically your best low risk sell is going to happen in an area where you have overlapping order block and imbalance. So that's an area where if price draws to it and then sells off, it's a sign that the market is getting ready to potentially switch into a sell program. So that's your first area to sell within a sell program. Then normally what you're looking for is a short-term high to get put in, an intermediate term high that basically raids or purges all the short-term high liquidity here, and then drops and shifts structure below this level right here, and eventually the external low. In this case, one could say this is the short-term high. On an 8-hour time frame, it would be, just because if you mark in this stealing range from this swing point to down here that broke this level right here and closed below, that would be your 8-hour short-term high, and then eventually takes out the external low. But if you switch it into a daily, it was just a liquidity raid. So this wouldn't be your short-term high here. I'd be looking for it above this high right here, because this is the candle that closed below that low. Now in this range, you can see I marked in 4-hour, 8-hour, 12-hour, and daily imbalance. The only difference is Coinbase, for whatever reason, they rebalance in real time. So you can see that wick up rebalancing. But if you go on Binance, here's your 4-hour chart. You can see the imbalance clearly there. 8-hour, 12, daily. So on Binance, this is a very valid imbalance zone or a draw on liquidity. Coinbase, again, they just tend to rebalance on the way down. Their algos are very efficient. So what I'm looking for now on the daily is between this high and this low to sell off. Somewhere between the 618 is going to be somewhere above these highs. So you have a cluster of highs here. This is a liquidity pool, and that would be inside of that imbalance. So this would be the area more or less that I'd be looking to get sold off if you're trying to hunt a short for a short-term high within this range. And then this would confirm distribution, and you'd be looking for all this market maker model to get eaten up at the very minimum down to the 886. So the IPTA 60 low right there. Now within this range, this is what I'm watching. So on lower time frame, between this range, you basically add a low time frame sell program where these highs, this cluster of highs, was essentially the short-term high within this fractal. So that intermediate term high is the one that swiped those out right here. And then you had order pairing above there, activating a sell program on the intraday, which is the 2 hour and 4 hour. And then you could see your Darvas boxes very clearly. Distribution 1, distribution 2, where people were taking profit at the 2 to 2.5 projection from this low to that high that manipulated above that. And then you could see your smart money reversal happens in that green 4 hour imbalance right there, which was also below this external low and inside this weekly imbalance. So it was a very strong draw on liquidity, and this could mark the bottom, at least for the short term. And then what you'd be looking for is this to flip into a buy model in this range. Now, a lot of people assume that it's going to take out the original consolidation right here. It doesn't have to. So the way I'm treating it is this can go up to the 886 and still be a valid buy program up to here. So I'm looking for minimum this cluster to get taken out, because you could see a cluster of highs, right? So that's a pretty valid liquidity pool. And then you have a fractal, which is basically the same looking liquidity pool here. So you have two targets, one around the 618 inside this imbalance, and then you have the more valid target for a buy program, which I would say is this high and potentially this one too. But at the minimum, if we get above and build above this imbalance, I would look for these highs to get taken out, and that could be the short-term high in here, which would be above these highs. So I'd either look for it there or down here, but either way, until we build above the previous all-time high, the assumption is we're in a sell program. So I'm just watching how that evolves. Now, one of the other things I'm looking at within the sell program is if we do put in a short-term high, before we do, let's say we don't take out these stops and we pull back here, leaving this liquidity, then we have a potential low resistance liquidity for run for this week. In this range, we formed a 4-hour breaker. So that was your last up candle before purging all the external stops over here below that low. And then you can see we went right through it with that displacement candle, leaving behind this imbalance. So if we do pull back before taking out this cluster right here and hitting that imbalance, what I'm looking for effectively is a retracement back into discount within the range, retest the breaker, rebalance that zone, and then go to the short-term, potential short-term high, taking out these stops, these, and rebalancing this. So that would be a very, very good long to take if we get back in here. And again, I'm defining the dealing range. Between here. So you can see your equilibrium within this stealing range is the bottom of this imbalance and inside of that breaker. So assuming we pull back here, that would be a really good area to go long into here once you see support. And it would also be retesting the external low. So that could be like the optimal entry for a buy program into the highs. Now, in the event that we put in the high over here and we start pushing down, what am I targeting? We have this 8-hour order block right here. So you have 8-hour demand below this cluster, which is a 3-day order block right there. So the assumption is you have order block stops right there below this 3-day demand, and you have, and those will be right above the 8-hour demand. So this would be a good area to bid. And if you zoom out and just take the volume profile for this entire range for the sell program, you could see that there's pretty good volume down here. There's another high volume node right up here. So even though these stops get taken and you see it basing over here, doesn't mean the move is complete. Like, it could do this and then reverse, but what it could do is take this range and create a harmonic. So the wave structure would look like this. So there's one right here, which would assume that this high volume node gets held in this cluster. Your 886 is going to be here. If you look at the drawing, this is a pretty clean bat structure where basically wave 1 is a 50% retrace, 886 on the lower high, and then 886 completion right over there with a 1618 projection. So this could be one version of the harmonic. The other version would look more like this. So this would be the more extreme wave structure. Short-term high at around the 705, and then your 886 would be right at the point of control within this MMXM. So like this cluster right here would be an incredible area to buy just because it's already proven to have a lot of volume traded at that level. So, and it would be completing a pretty solid tight harmonic if we get this short-term high. So I'm looking for this as a potential entry too if we do collapse, which I don't think we will, but if we do, that would be a potential entry as well. And I guess the last thing I'm looking at here, this is the chart a lot of people were looking at on my X feed. So this would this is like the bird's eye view of what I'd be looking for on the daily, where basically you get a pullback into the breaker and rebalancing this zone right here into this imbalance right up here. And this is your short-term high. So short-term high, intermediate-term high, short-term high, and then the push into this weekly internal imbalance below this cluster, which would essentially take everyone's all the order block stops right here, and then complete the harmonic. So that's going to be another scenario. And then one last one I'm looking at. So here's your range high, range low, consolidation, deviate below the range low. So that's your consolidation, manipulation, and then distribution to the highs. Doesn't have to go all the way up to there. This distribution could stop right here but it's more likely to go right there, because typically the distribution is looking to distribute above the original consolidation highs, so these highs, and you can see there's your imbalance. So I'd be targeting this level right here for the accumulation, manipulation, distribution. And again, if it goes to the extreme high, you're looking at the deviation potentially of the previous all-time high. So those are multiple scenarios that I'm watching. Who knows what Bitcoin's actually going to do. Again, I don't trade Mondays, but I'll be watching the Monday range just to see how the week is shaping up. My bias is going to be down into the breaker, and then basically at least these highs into that imbalance, potentially into these highs right here. And after that, I'm pretty much looking for shorts. Otherwise, if we break below here and then raid this liquidity, you just want to see if it builds below this, and then that would be confirmation that we're going to go into like a heavy sell program, probably targeting these lows. So big week ahead, probably going to be some action after Tuesday, and I'll update any charts that I see along the way. All right, guys, cheers.